Jenny Horn, thank you so much. We're watching Disney. Walt Disney reports earnings today after the closing bell. So what can we expect from subscriber growth with Disney Plus? What about some guidance on the theme parks for full reopening? Brett Sifling is with us, investment advisor representative, Gerber Kawasaki, and Dryden Pence, Chief Investment Officer, Pence Capital Management. Thank you both for being with us. Dryden, what are your expectations here for Disney?
Well, we actually are very pleased with how Disney seems to be coming out of this. So we have positive expectations with regard to it. The big thing here is that they are years ahead on streaming. They're about 4 years ahead on streaming. The number of subscribers that they have, a couple of years ago, Disney had almost zero recurring revenue from streaming, and now it's going to be, probably a couple of years, we're going to be at $16-17 billion. So I think that you're seeing a tremendous increase in that. So streaming's been great. And as the pandemic, we get moved through this, you're going to see opportunity and optimism around the theme parks, and that sector of their business will come back. So we're very, very fortunate that if you look at the guidance that they have going forward, Disney's really becomes kind of a growth play. And we're going to see more streaming, and we're going to see more activity in the parks. I mean, these things will come back, and so we're excited about that.
Brett, why don't you expand on this? Because I think that there's definitely, to Dryden's point, a lot of excitement surrounding Disney Plus and how quickly it grew, catching up to the names like Netflix, in such a short period of time. What are your projections, Brett?
Yeah, this is a digital play and a physical reopening play for us. We're really excited to see, hopefully, the parks getting opened back up in the next, 6 to 9 months. This was Disney's cash cow, and so short term, they really got to focus on getting that back open. I mean, it's still a super vaccination site here in Southern California. So once they get that cash cow back up and running, Disney Plus is just hitting on all cylinders right now. And they have 120 million subscribers between all the streaming platforms. So really, I see that they have major strengths there with pricing power, too. Not only with the parks, they have the ability with the new tier ticket system to charge more per customer, but they also have a lot of room to increase prices with Disney Plus.
So they have pricing power at the theme parks and Disney Plus, Brett? Is that what you're saying?
Yeah, exactly. I mean, you can pretty much get Disney Plus and ESPN Plus at this point for the cost of Netflix. And, as long as they don't have the debacle that Xbox Live and Microsoft had by just raising the prices immediately and shocking everyone, I think that they have a long runway, basically, to increase prices over time, increase profitability, and get this DTC segment up and running and profitable as soon as possible.
I think we make a great conversation here, Brett. You made the point of it being a digital play and a reopening play. Because prior to Disney Plus, other than going to the theaters and the theme parks, we felt like Disney wasn't going to make any money, right, Dryden? Now it's a different picture. But the parks are still so important. How quickly does Disney really need to get these parks reopened, even at 50%?
Well, I think that what's going to happen here is if anybody can do large crowds well, it is Disney. And they have multiple parks globally, so they've had the opportunity to learn as we've gone through this process. So I would think that you're going to find more capacity and more parks. Obviously, Orlando's open at diminished capacity, and then we're going to look at Southern California. So the biggest sources of their cash in the parks, probably between now and late summer, are going to be having increased capacity, increased open. I mean, it's up to them when they open. But I think that we're seeing this as more and more people get vaccinated, and as children are less affected by this, I think you're going to see a tremendous pent-up demand for people. Because, if you've been cloistered with COVID, the kids are saying, what do we do next? And you're saying, when this is all over with, we'll take them to Disneyland. And that's what's going to happen. Once it's open, it's going to be full.
I think you make a great point. People have been talking about the pent-up demand for just about everything. Brett, what are your thoughts on what we're seeing with the stock price? I mean, there was a time in the summer, not this past summer, but the summer prior, where I would say Disney new high, Disney new high, Disney new high, and it just became, a broken record. And then it wasn't Disney new high anymore. In fact, it was at $79 at its lowest point back in March. Now it's $190. Disney new high, Brett. Now what?
Yeah, we got to get used to saying Disney new highs again. It's really a hold for us at this point. I mean, in our eyes, Disney is pretty fully valued until they can really get these parks and cash cow back open. Yes, we love the digital growth story here, but at this point, you're paying a pretty penny to actually participate in that growth. So again, we've owned this company for a long, long time. It's been a darling for us, and we're really excited about its future. But at current prices, right now, everything is really priced in for them to execute perfectly. So any stumbles along the way, any lowering of guidance or any no guidance at all could affect the stock price.
Dryden, what do you think? I mean, you make a great point, Brett, that you've held this a long time. It's done very well. Over 1 year, it's up 33%. But what a run it's had since $79 up to $190. Dryden, where do you stand on the stock price?
We're more constructive on this, and the reason why is, Disney's audience is not just the United States. When you consider the fact that they have Hotstar, another part of streaming, in India, and that it's becoming the dominant player there are 350 million children below the age of 14 in India. That's bigger than the entire United States, and that's a huge segment of that population. So Disney's global reach gives them a tremendous capability to expand beyond this. So we're a bit more constructive on this because the audience capability that they have just continues to get bigger and bigger and bigger.
So constructive meaning at 190 you would buy a little, and then in 6 months you would buy a little, or what does that mean?
Disney is still in our portfolios. We've owned a lot of it for a long time, and it's in our models, so new money gets it.
Ah, I see. Okay. And Brett, let's expand the conversation into the world of streaming. We saw Netflix raise prices. You talk about pricing power for Disney overall. What do you think about the streaming space?
Yeah, I mean, currently right now, the streaming space is all people can do besides play video games, really. They're still confined to their houses. Disney Plus specifically, their direct-to-consumer segment, they get about 56% of their revenues internationally. And so I do agree with Dryden that there is a huge international push here. They've talked a lot about expanding to the Asian Pacific countries this year. Obviously, China's going to be extremely hard to break into. We're still not on great terms with them as we put this kind of trade war on pause, a word we haven't heard in a long time. So it's really going to depend on their ability to break into these markets and really expand that streaming platform all the time and get their costs down as much as possible.
And Dryden, you have a chart showing subscriber growth. Let's take a look at that. What are your thoughts on digital overall, or just Disney's subscriber growth? What is it all telling you?
Disney's growing very, very rapidly. By probably 2024, it's going to be bigger than Netflix, and they still have a huge footprint. The other thing that we have to look at as we roll out of changes in behavior in a world post-COVID, Disney is probably the last thing anybody will ever give up, either in any long-term recession or anything like that. But more importantly, this is giving them tremendous long-term recurring revenues, something that they've not really had in their corporate structure. And so we think they're going to be bigger than Netflix in streaming subscriber and streaming, and then all the other segments of their company are going to be firing on all 8 cylinders. So again,
yeah, you want 10 more seconds on subscriber composition and net adds? You want to give me your last final thought? I know you sent us a lot of stats on that.
Exactly. So the point of the matter is when you get net adds, when you add Hulu and when you had total subscribers and then you add India and all of these things together, they're adding tremendous growth, and they're going to continue to do that. And all things, take a look at how much they are above ESPN. So people worried about that before. Now we've far exceeded that issue.
Thank you both, Brett Sifling and Dryden Pence. Nice to have you both on the show. Thank you, Brett Sifling, Gerber Kawasaki, Dryden Pence, Pence Capital Management.